12:10 already, so let's just get started with this. So, first problem we have here is for FIFO, and it's Linda's Boards sells a snowboard expert that is popular with snowboard enthusiasts. Information relating to Linda's purchases of expert snowboards, that's a misspelling, during September is shown below. During the same month, 121 expert snowboards were sold. Linda's uses a periodic inventory system. So what's the first thing that we're going to want to do with this problem here, given the information that we have? So September 1st, we have an inventory, which is our beginning inventory of 26 units at a cost of $97 per unit. September 12th, we have purchase of 45 units at $102 per unit. September 19th, we have purchase of 20 units at a cost of 104 units. And then on September 26th, we have a purchase of 50 units at 50 units with $105 per unit. So what's the first thing that we want to do here? What is the first thing we want to get out of this information to make our job a lot easier? Because we're going to end up wanting to find the ending inventory, the cost of the ending inventory, as well as the cost of goods sold. So the first thing, what is the first? So, okay, first thing we're going to want to do here is try to get our total costs all ready, so that we know what our costs can't exceed. So this one, 97 times 26, because 26 units at $97 per unit, its total cost of 2,522 units, or $2,522. And then we have 102 units, or 45 units at $102, and that would be 4,590. Next, we have 20 units at $140. So we'd multiply those two. We get our total cost, $2,800. Then we have 50 units at $105. This will give us $5,250 total. And we add up all the previous costs, or the previous items in the row here. 45,950 and then 2,522, and that'll give us $15,162 in total. So here now we have all of our total costs per interaction, pretty much, or this first one technically isn't a transaction. Well, it was at one point, but right now it's our beginning inventory. And the purchases afterwards each have their own total cost associated with them. So now that we have that, we can go about finding our ending inventory and our cost of goods sold. So the first thing we can do here is find our ending inventory, which is, sorry about that, the dogs like barking at the mailman a lot, so we can try to keep them calm, but they just love doing it. Anyway, 121 snowboards were sold during the same month, during the month of September. So from that, we can see that we have an ending inventory of 20 snowboards left. So we still don't know the cost that we use for those snowboards. So we're using FIFO, which means first in, first out. What does that mean to you? What does first in, first out mean to you? I don't want to mispronounce your name. I'm sorry. Divya? I'm sorry if I mispronounced it. What does the first in, first out mean? First. Exactly. So FIFO really means that the first thing that comes in is the first thing that's going to go out in terms of the product that we get first is the product, or the cost that we get first is the cost that we're going to use when we're selling that product first. It doesn't necessarily have to match what came in and what comes out. It's usually the cost tied to that product that they'll use first or last. So for first in, first out, what we're going to be doing here is using the cost at the top of the list, the first costs, as the first products that came in. Even if it's not actually the first product that comes in, it's the cost that we're going to be using. Kind of like how people usually, I don't know if you do this, but I tend to, like, if I want to buy milk, I tend to grab the stuff from the back because I know that's the stuff that was put in. Yeah, that's the stuff that they want to move in last, just because the ones closer to the front are the ones that are going to expire first. But if you get the ones from the back, they're the ones who are going to expire later. Even though that other one came in later and it came in last, technically, they're going to use the cost of the first milk jug instead, just because, or if that's if they're using the FIFO method. So the physical flow of goods doesn't necessarily have to match up with the actual cost flow. So for this one, we sold 121 units, so we can get the cost of goods sold that way. So for this, we're going to go each step one at a time. So let's start with 26 units. So we already have the cost for that. That'll be at 97. And that'll give us that. That'll give us the cost, the first cost. So now we have 141 units minus 26, or not 121, 121 units that were sold minus the 41 unit, or the 26 units. And that equals 95. So we have 95 units left. So we go down to the next layer, which is this first one, September 12th, purchases of 45 units at the cost of 102 units. So here we're going to do the 45 times 102, since we're using up that whole layer, and that gives us the whole cost. Now we're going back to from the ones that we sold. We're going to subtract the 45 to see how much we have left. 50 more units that still haven't been accounted for in terms of cost. So now we move down. Next layer, September 19th, purchases of 20 units at $104 per unit. And we're using up that whole layer as well. That gives us the entire cost of that. And then we're going to keep going down this way. So now we're at $50, or 50 units minus the 20 units that we used previously. That'll give us the 30 units. And then now we see that this last layer here, we have 50 units, which is more than the units we have left over. So here, what we're going to do, instead of doing the like we did before, using up the whole layer, we're only going to use what's actually sold. In this case, 30 units, and multiply that by the cost of that layer, which is $105. That'll give us $3,150. So We can either add all this up, or we could just look at the total cost. And then, or actually, we're still gonna have to add all this up. So the cost of goods sold is going to be 2,500, or this way, so it actually correctly writes it out. 2,522. Add that to not 95, 4,590. Add that to 2,880, or 2,080. Then you go down again, add 3,150. And then you get your cost of goods sold, which is $12,342. So now going back to this inventory, we know since it's first in, first out, we can sort of do the reverse on this. And instead of working from the top layer down, we can work from the bottom layer up. So if we're going to find 20 units, 20 snowboards, 20 units left, we're trying to find the cost for those, we would do those 20 units times the bottom cost, which is 105. That'll give us 21,000 in ending inventory, 2,100 in ending inventory. Also, if we did just find our cost of goods sold, we can test it another way and use the total cost that we have here, 15,162, and subtract it from our cost of goods sold, which is 12,342. So there we go. We have discrepancy. So see here, we have it. Did I write that right? 2,552, 4,590, 2,808, 315. Where did I miswrite this? 255, 4,590. Oh, I miswrote it here, didn't I? Okay. Oops. 080. That's where I miswrote it. So that's what it is. Sorry, my bad. Let me just rewrite that. Where did I get the 15 from? The 15,000? Is that the 15,000 from right here? Is that where you're asking? That I got it from, if you go right up here to the total cost, it's basically the total the aggregate cost of all of the purchases and beginning inventory. So these lines here, they're all for the rows. This will give you the total cost for this unit times that unit, or this unit times that cost. But the last one will give you the cost of the entire, for the entire month pretty much. But I miswrote something in 2080. That's why it came out a little weird. So it's not 15,000, but 14,442. And let's see if I get it right this time. And there we go. So now that's a good way to check to make sure that you have your right ending inventory and your right cost of goods sold. If everything kind of matches out and balances out. And as you saw, I did make a mistake here and put 2,800 instead of 2,080. So now here we have oh, let me check that. Okay. So here we have our total FIFO, or our total ending inventory and our total cost of goods sold. Let me just highlight it for you there. That's our ending inventory, and that is our cost of goods sold. You have any questions on this before we move on? Or is that makes sense? Okay, so I'm going to move on to the next one. Originally, I was going to do this, but if we have more time, I'll come back to it. This was just a leftover. And notice I did send out the slides, but notice that I did change it a little. Instead of perpetual, let's assume that it's periodic, but with LIFO. That way, you can just, instead of doing FIFO for the same problem, you can try LIFO, see how different it is. Originally, I was going to have you do this with a perpetual inventory system, but the way the problem was written, it's kind of difficult because you don't know when certain things were bought, so you can't really go and like look at it with a perpetual inventory system without knowing the exact dates of when certain sales occurred. So it just gets a little murky. So that's why I kind of just decided to change it to this. So instead of FIFO, it's going to be LIFO with the same periodic inventory system. But I don't think periodic or perpetual in LIFO and FIFO shows up too much. So here we have LIFO, lasting. So LIFO here we have this problem. It's a little simpler on the, at least for the explanation that it gives. So Coletta Company reports the following for the month of June. They use a periodic inventory system. So what's the first thing that we want to do here? It's the same thing that we did for the other problem. Yeah, the total cost, exactly. So do you think you could give me the total cost for each of these columns here? Or each of these rows, I should say? So 1,000 for the first one. 2,400 for the second one. And 2,100 for the last one. So I want you to also notice at the bottom one on June 30th, I have its explanation is inventory and it's 100 units. This is basically saying we have 100 units left over. So what I'm trying to say is ending inventory is 100 units. So now this gives us, instead of giving us how much we sold, it gives us how much we have left over. So that means here we're going to have to find out how many units we actually sold through the month by adding up everything here and then subtracting, or not everything here, subtracting, or adding up the previous, the beginning inventory, adding the purchases, and then subtracting the 100 units, which will give us how many units we sold. So here we're going to do 200 plus 400 plus 300. And that'll give us 900 units in total that we had for this month. Of those 900 units, 100 were left over. Why did it do that? Okay. 900 were left over, or of those 900 units, 100 were left over, or were left over. So 800 units were sold. So now we know how many units we sold through this month. I almost said year, but it's not a year. So another good thing we could do is add the total cost here. I'll put it down here at the bottom so you don't mix it up with the unit cost and inventory thing at the bottom there. So here we're gonna have 5,500 left as our total cost. We're just adding these two here will give us 4,500, and then add 1,000, give it 5,500. So that's how what our total cost is. That way we just know if we have to use it again. So if we're trying to find just ending inventory in units, so here, what are we going to do to try to find our ending inventory cost? Or first, let's say, what does LIFO mean? That's a better question that I should ask first. What does LIFO actually mean? Latest goods purchased are the first to be sold. Exactly. So basically last in, first out. And last in, LIFO, last in, first out. That means the goods that we buy now are the ones that we're going to sell now, or the costs that we're going to use now. And so we're going to use, instead of starting up here and using the June 1st layer as the first unit, as a unit cost for what we're selling, we're going to use this $300, or not $300, 300 unit layer, the June 23rd layer. We're going to use $7 per unit as the first unit, as the first cost that we're going to get rid of. So let's start with our ending inventory. If we have ending inventory of 100 units, how are we going to find it in, what's the easiest way we can find the cost of ending inventory using LIFO and the information given here? What am I going to want to multiply that 100 by to get our cost? Which cost am I going to be using? So $7. So I get why you'd say the $7. $7 would be if we're doing what we sold already, but we have our ending inventory here. So if we go, we have a total of 900 units, 100 left. So we have these 100 units remaining, which means that their cost hasn't been accounted for yet because we haven't sold them yet. So in last in, first out, we'd use the last ones first. The $7 is the most recent cost. So if we were using that for our units sold, then we'd use the $7. But since this is for our ending inventory, we're going to be using this $5 cost. So we're going to be doing 100 times the 5. That way, we're using that last cost to account for our remaining inventory's cost. Yeah. So basically, we're using the $5 as the cost because it's the first cost that we acquired, not acquired. It's the cost of the first units we bought. So that's the first ones that we have. The last units we have bought are these $7 units. And for last in, first out, we're assuming that we've already sold 800 units. So if we do it this way, we're doing, let's say we start at the June 23rd layer. Those 300, they're going to be moved towards our cost of goods sold. The 400 also towards our cost of goods sold because we sold those 700 units. And then we go to this last 200 units at the $5 cost. We sold only 100 of those units, and 100 of those units will go to the cost of goods sold. The remaining units will not go to cost of goods sold. They will go to ending inventory because that's what we have left. We have only 100 units left, and that means we're going to be using that $5 cost to account for those 500 or those 100 units. Does that make sense? Okay. So we have our 100 units and our 100 units at $500 for ending inventory. So here, a good way we can do this quickly is to just say our total cost of $5,500 minus our ending inventory cost of $500, and we have a cost of goods sold of $5,000. That's the quicker way that you can do it. But just to make sure that we have everything that we need, just to check that we have all the right numbers, we can start from we can check it the way that we did for the FIFO ones. So let's start with, we have 800 units sold. So of those 800, we use the bottom layer first, which is 300 times the $7 cost. That will give us 2,100. So now we take 800 minus the 300. We have 500 units left that haven't been accounted for. And we move on to, where is it? 200 units, or not 200, 400 units. Multiply that by the 6. And we have 2,400 units again. Again, most of the time it's going to be, we're using whole layers, and then we're getting to a layer that's going to be partial, and that's when we're going to have to change the number a bit. But for the most part, we're pretty much copying down the numbers here from the total cost. So that's that. And then from our 500 units, we'll take away 400. We have 100 units left that haven't been accounted for, that have already been sold. And of those 100 units, we move up to the next layer, which is a $5 cost. And then we have $500 left. So our total cost of goods sold would be 2,100 plus 2,400 plus 500. That'll give us 5,000. So now we have our cost of goods sold here. Oop, let me do that. Cost of goods sold here. And our ending inventory right here. And adding those together will give us, again, the total cost that we have for this whole month. How much time we have left? A few more minutes. So now we have our ending inventory, our cost of goods sold for both LIFO and FIFO here. So we're going to have another 20 minutes left. So I guess we're going to have enough time to do another problem here. We have the same one, but for FIFO. And then, actually, let's try this one over here with LIFO instead, because that way we can see the difference between them a little better. And this one seems a little more interesting as well. So total cost is going to be the same. It's going to be, what's the total cost for these again? 2,500. 2,522. 4,590. 2,000. Right. 5,250. 14,442. Total cost of 14,442. So again, here we want to find ending inventory and also our cost of goods sold. So first we have, as we said in the previous iteration of this question, we have 20 snowboards, or I'm just going to say 20 units left. We have 20 units left in our ending inventory. And much like we did with the previous one, we can, instead of internet connection is unstable. I don't know. Is everything still fine? Because I just got a message that said my internet connection was unstable. I don't know if you can still see or hear me or anything like that. I hope it's fine. Really hope this does not crash on me. That would be bad. Either way, is everything still okay? Did I crash? Okay, good. Hopefully my internet doesn't give out on me right now, because that would be very bad. So anyway, we have, what was I saying? 20 units. So in our ending inventory, we have 20 units. And much like we did in this problem here, we can simply use the topmost layer, and then we can do those 20 units times the top cost, which would be $97. That'll give us an ending inventory of 1940. And now cost of goods sold, we can simply just do 14,442 minus the 19,000 or 19,000, 1940. And that'll give us our cost of goods sold. So this is our ending inventory, cost of goods sold here. And again, we can do the whole process of going through each and every layer to check. But at this point, I think you kind of understand how the how that whole process would go. We'd go from layer to layer. In this case, we'd start at the bottom. We'd use those 50 units at 105, and then these 20 units at 104, then 45 units at 102. We'd use pretty much this whole cost here. And then when we get to this point here, we'd use, let me see, 6 units left. We'd just use this last 6 units here. And then we'd have the entire cost of goods sold. So we pretty much go up through the layers. These whole layers would be used up, and then 6 units from this layers would be used up, and then we get our cost of goods sold of 12,502. So the thing that I really want you to see with this is the difference between the ending inventory and cost of goods sold. So here we have two different, let me see if I can get this a little bigger. Let's see if I can get that a little bigger so it makes a little more. Good. So here we have our ending inventory for both LIFO and FIFO. I'll make sure this one says this one, say FIFO. There we go. So we have our ending inventory with 1900 here, but 2100 here. So we have more in our inventory in FIFO than in LIFO, but our cost of goods sold is a lot higher in LIFO than it is in FIFO. And what that'll do is the LIFO will give you a better tax break, simply because it's got a higher cost associated, or it gives you a higher cost of goods sold, which will then take off from your revenue, and from there it'll tax you less since you technically earned less, but really you're just using the numbers in a different way. You can kind of see that, right? Okay. Last LIFO problem. One more problem here. We can do FIFO, or no, we just did that one, didn't we? Yeah. Let me move this back so I don't confuse myself. So now we have our LIFO for this one. So we have one more problem we have here. It's the same one as this one here, but instead of LIFO, we're using FIFO. So for this one, I'm going to try this one. I want you to give me the ending inventory, the cost goods sold. Just walk me through what let's see. So we've already got total costs right here. I'll move this up over here so we don't have to recopy the total cost. But remember, this one's going to be for FIFO. Okay. So first, our ending inventory. So we have, like I said here, our ending inventory was this 100 units. So I'll set up all the given information here. And then our cost of goods sold, 800 units. So here we have our ending inventory, and my internet connection is unstable. Okay, our ending inventory of 100 units and our cost of goods sold or our 800 units sold. So for this 100 units, what are we going to do with this? How are we going to get our cost of goods, or not cost of goods sold, our ending inventory with FIFO for this given information? 100 units here. And since this is first in, first out, for our ending inventory, we're going to be using the last cost the last unit cost. So in this case, we're using the $7 unit, $7 per unit cost. So we have our 100 units times the $7 per unit. We have a $700 ending inventory. So for our cost of goods sold, we can do once again, we can do the 5,500 minus the ending inventory, but just so we can kind of see the flow again, we can do from the first layer down. So 200 per unit, 200 units times $5 a unit. That'll give us 1,000 again. We're using the total cost again. Then 800 units minus 200 units that we've already accounted for. Got 600 units left. And then with those 600 units, we move on to the next layer, and the whole layer can be used up. So we use 400 units times a $6 cost. That'll give us the whole total cost for that layer as well. And we have 600 units. Did I do that right? Oh, I meant to do 300 units here. Oh, wait, no, I'm right. Wait, oh, what? Oh, I did it the wrong way. Went back up. It's supposed to be 600 minus 400. I mixed myself up a bit. Anyway, so we have 200 units left that haven't been accounted for. And we go to the next layer down. I was still in LIFO mode for a second there. So we have 300 purchases, or 300 units at $7 cost. So of those 300 units, we can account for 200 that have already been sold. 200 times a $7 cost. You have $1,400 cost for that unit. And we've already run out of units that we need to use. So our cost of goods sold is going to be the 1,000. That is 2,400 for the next cost. We're just adding up the cost here. And then 1,400 for the last one. That'll give us 4,800. And just to make sure, we'll do 5,500 minus 700 units, and they match. Even if you know for a fact that it's going to be, even if you feel 100% confident that you've got the right answer, it's always good to just double check. So let's move this down here. And like I said, you can see it again here. The FIFO ending inventory is higher, and LIFO ending inventory is lower, but the cost of goods sold is higher for LIFO, and that'll give you a better tax break than the lower cost. So if we move this back down to its own little thing, and there we go. So that's pretty much LIFO and FIFO, at least the more important parts of it. I'm pretty sure you don't have to worry too much about it being perpetual, at least not for this class. I know for later classes, they're going to have you do a whole purchase and sale schedule thing where for each sale, you're going to want to account for the cost of goods sold at that point if you're using a perpetual system. But since most of the questions here are periodic, you don't have to worry as much about that. You'll just have to worry about maybe every month or rarely you'll see every year, but every month they'll have an update about inventory and cost of goods sold. And that's where most of this problem comes in. But if they ever ask you for a perpetual inventory system, FIFO is usually the same, just because, well, every purchase adds on to the bottom, but the top keeps getting used up the same. So it's not really too difficult to account for a perpetual or for FIFO for a perpetual inventory system, just because you're still using the top not the latest purchase. But for LIFO, since you're using the latest purchase, and every time you purchase a new, like let's say here we're like in the middle of June, and I've been using this $6 cost to account for my cost of goods sold, but I do this $300 or $300 unit purchase, I'll be using this $7 cost instead, even though there's still going to be $6 cost or units that still have a $6 cost with them. But that I don't think you have to worry too much about that for this class. At least I don't remember it too much from this class, more from my other accounting class. But yeah, I think that's just something I wanted to get out there. Something I was going to cover, but then I realized probably not so good with the way the problem was formatted. Anyway, do you have any questions that you need answered, or anything, like any comments, concerns, anything like that? You good? Okay then. Well, I don't really have much else in terms of content for this session, but I think I've got through just about everything I wanted to. And I think we're pretty good here. Thank you. Also, this is being recorded, and I will send it out to someone to get it edited. They will give me back the video, and as soon as I get it, I'll give it right back. I'll give it to you. That way, you have something to study from. So that'll take a minute though, just because there's a lot of people wanting to get their videos edited. So thank you for coming to my session. I'll be having more online sessions. Those since the stuff with campus, it's not technically closed down, but it basically is closed down. But with all this going on, we're going to be having more online sessions. It'll be on the same time as my regular in-person sessions, but I'll send out links and announcements for that. So just keep an eye out for those, and I'll be here to help again. So have a good day.